Pretty textbook day. S&P could not get over a core level. Let's just mark it off so that you can see it as well. Once you see this, you kind of know that it's just, hey, let's put the brakes on a little bit. We'll have to drop this down a little bit to a 5, and I'll mark it off. In front of you is the open from last night on Sunday, and I don't care if you are a day trader, swing trader, or long-term investor. Whenever you're coming up with core data like you are with CPI, you always want to mark that off. And of course, there's 4 parts to every major bar. To me, there's the open, there is the close, there is the high, and there is the low. And if we just mark off all 4 of those areas for a second, and then we just zoom out and take a look at how that transpired today, you can see how all those 4 turned into key levels and why it's so important to look at those levels going forward. It's pretty obvious why somebody would want to mark off those levels Sunday night on that 6 p.m. bar every night on a 1-minute chart, right? I mean, it's pretty obvious now. And we can just see the old pop over. Come on, guys, the water's warm. Come on in. The retest, and then the break, the retest of the low of that 6-minute bar, and then we just sold off straight down for the rest of the day. There was really nothing more there. We know retail's buying in the morning. We know institutions are selling at the end of the day. I think if you took a look at this on a 5-minute, very clean, and let's just get rid of our levels for a second, and just come and take a look at that 930 area, and mark that off. And once you broke that 930 open, that was it. You never came back. You never got anywhere near it. So they kind of chopped you up a little bit, made you think you were missing, and lured everybody in, and then smashed their hopes and dreams and sent them home with hot pockets. And that's just the way it is. If we're looking at this level, we shouldn't be overly surprised by it. You're back to the level right here, which is that Thursday open, which the Friday follow through. So we've bonked on that level a couple times, and it is what it is. Now, tomorrow we have CPI, and we'll get there in a second. But I do think that we should just take a look at the NQ as well. And you can see that you have the same soup reheated right up there. It's not really worth spending a lot of time on. What I would say is this. We're going to drop down to a 3, a 5, and an 8. And we're going to do this on both, but you have broken the 5-day moving average on the futures market. You've done this in the past as well. Then you bounce off the 8 and then you're okay. When you don't bounce off the 8 and you start to use it as resistance, as you're doing right in here, you want to pay attention. And a lot of this has to do with the weighting tomorrow of CPI coming out and the fact that people are expecting it to be a little bit higher. And we're going to get into that as well. Also, some of these moves that have happened recently, they've been huge, and the RSI is showing that they're completely overbought, and we just had no follow through today. We'll get to that as well. But, the short, quick trades have been the best, but this is definitely a concern, and it's certainly something I'd be paying attention to. If we drop this to a 15-minute, and you can see right here where the RSI is, you can get your little bounces off of that, especially tomorrow with CPI. I guess the larger issue for me is when I look at the RSI up here and realize that you're almost even, but you're not exactly. And that the commensurate move on the RSI is nowhere near where you are here. I don't really use the moving average. I don't really care if it breaks it down or not. Some of you guys do. That's fine. You should do what you're comfortable with. I guess the thing that does bother me about the structure more than it bothered me when I had the time to do Saturday's video is now I'm getting this sucker. And if I mark off that right here, that bar where we opened and then we make that super tight and we just move it to those. Forget the wicks. Wicks are price rejection. You're getting in here and you're starting to set this up in a level that it's not great. And you've already broken here. So we've already broken down on this level. And that is definitely an issue for me. So in other words, if we follow through, if the RSI breaks first, I use it as a leading indicator. You should do what you want with it. I do have a concern here, and I want to watch how this plays out tomorrow. I was somewhat surprised by no follow through on even some of the good news. There just really wasn't any. So it is what it is, and we'll take what we get, and we'll build on it. For me, it was pretty simple. I did a lot of the day trades here today, and I thought that was the way to go with it. Surprisingly, I made more trading AMD than NVIDIA. Super simple trades on these moves, guys. You can just see the dojis, the way that the stuff's setting up, the flips. Whenever you're eating this up as well, it's super important. But if I got rid of the pre and the post for a sec, and you just watch these levels, you can just see how they're acting as soon as they're getting up to those previous closes. They're just fighting them, and then they're flipping, and then that's it, it's on. But this presented a huge opportunity because of the pre and the post trade. My concern with it now, and some of these names are, when you start getting up to these levels, like you are here, it starts getting choppy. And the RSI is rolling over, you have to start asking yourself what's going to be the driver. But from a short-term trading perspective, This level of volatility provides great opportunity. You just have to get out when the getting is good. And again, this was just a monster trade for us today. Here, take a look. Seems to me all you're doing is the old shake and bake with a lot of these names off the open. They're really not even breaking their opening prices. Like they're breaking them and then they're running them right back up. But imagine the fact that now you're open to the market that you're going to go. I don't think you're going to stop. That's an interesting spot to get involved because it doesn't cost me much. So let's get involved. Bought AMD. I mean, all it's going to cost me is this bar. And if I'm wrong, I'm wrong. Let's get out of the way. AMD up $1, trimmed. Well, they don't like something. Looks like I'm going to get stepped out the rest to break even. Got a catch. If you're not going to go, then you're not going to go. Like, is that it? Okay, there we go. So we're catching. What's going on there? You hit it 1, 2, 3, 4, 5 times, that little thing. Just close there. I really don't want to get below this. I'm just going to put an alert there, and that's going to be my stop. Nothing to do there. AMD 175, trimmed, up 4, 4.5. You are in a position here where you're going to form a huge bullish engulfing. Do I really want to take it or just see what it does? So I gave it some time because I don't think it's done. Now what we have to do is just move the stop up on the rest, which is 175.70, almost $6 on this thing now. The AMD I'm still in, but I'm getting to that point where like I'm up a lot and I don't feel like going for a ride. So I might just kick the rest. And that's really the kind of trading you're dealing with right now, where they're rallying up and then they're trying to hold and then they're starting to roll over. And it's just more of a frothy market, and to an extent where they're just, oh, I better get in right away. And then they're rug pulling in a couple hours. This kind of environment really crushes people because they're thinking that they should be doing swing trades, and then they're constantly getting stopped out of the swing trade over and over again. Whenever you're in one of these kinds of environments, I just find the shorter term trades, or you could barbell where you're doing very longer term trades and you're leaving them on and you're allowing those to work. That's what works best in here. But knowing where I was, knowing where the previous high was up here, that allowed us to get out into this without waiting for this to go for, as I refer to it, as a ride. But could you do it again? Yeah. I mean, you've done it over and over again, 1, 2, 3 times, just in the past 3 days. You're buying the open, it's rallying, you're blowing it out. Buying the open, rallies, blowing it out. It's over and over again. So do you want to hold here over and over again, and now you're down on it for the past 3 days, or you just want to keep trading it? You're in a trading environment, and until that stops, I think you need to just realize that, because the last thing you want to do is try to build swing trades when you don't have a solid ground. And when you look at the market and where some of these things are and where they've been, that's where it really starts to rub. So for example, if I take a look at something like PLTR, which obviously has been an absolute monster, and then you start looking at the PLTR on the 4-hour start rolling over, making its first lower low on red. Could it break? Yeah. What else would you think that would be of concern? Well, the fact that the RSI on the 4 hours at an 86 and we're pointing to the downside, yeah, that could be an issue. And it doesn't mean there's anything wrong with it, but it just means that, hey, you might gap fill. And please don't tell me that it can't, because the stock was at $80 3 months ago. So yeah, for it to go to 160 is not the end of the world, guys, if you're looking at this stuff long term. See, when you look at this stuff long term, you have to figure out who you want to be. Like, to think that this couldn't gap fill, silly. Of course it could gap fill. And in this kind of environment, we're seeing stuff get absolutely destroyed. Look at things like Monday today. I mean, you're down over $75, and this was not a bad report. It really wasn't, but your close low a day. Just disclosure, I am short this. But for me, in this kind of environment, that's what I do. Those kinds of trades work for me. And then I'll just very simply get out of the way. Same thing with coin. Coin presented an opportunity to short this morning. I did it. I did okay with it. And then I don't stay short. I have a long-term short on right now, but what I'll do with it is I'll just allow it to work. And then you can start seeing these turns. And once you start having like real cracks like this, where you have a formal hourly down, you're not getting above that unless some kind of Christmas miracle happens at the end of the day. Here's the doji. Doji closed. Doji made a decision. This bar's 2x the size of the doji. No one's going to ring a bell, guys, but ding, ding. And then all of a sudden you just grind it down to the end of the day. Now the put wall's 320, so I made $5 and I just closed it and moved on. Do I think it could gap fill tomorrow? Yeah, but we're about to cover CPI, and it doesn't matter because nobody knows how we're really going to react on this information. You can all speculate, which is people seem to want me to do, like tell me what to do. Like no one has a clue what's going to happen. All you have to do is look at the information and that you're given and then make the best and most informed decision that you possibly can with it. I think the numbers are going to come in high. I'll get to that in a second, but let's look at with what JP Morgan has to say about it, and then we'll go from there. Now, tomorrow we have the core CPI and CPI coming out. Core is without food and energy, and you can see the previous numbers right here, and you can see 0.2, 2.9, 0.3, 2.7, and then consensus, 0.3, 3, 0.2 to 8. You could see that they're telling us that they're going higher. And I think this might be a reason why we saw some of the weakness today. And without getting too into all the graphs, if we just take a look from March over, we can see the drop from January, February, March, and then the liberation, and then 2.3, 2.4, 2.7. So it's very clear that whether they're front loading or if it's going to be a one-time event, nobody wants to hear the word transitory. This is what we're dealing with. But what we need to focus on tomorrow is this. We need to focus right here on the core inflation month over month. Now, as always, these firms come out and assess what they think is going to happen and then assign probabilities to it. And I think this would be a good time to take a look at that. JP Morgan skews it at a 2.6 and a 3.4, which means that there's coming in a 0.26 or 0.2 versus 0.3 or 3.4. Both of these numbers are higher than the street. So I would say this for all the research that I really looked at from the big banks, they're all skewing it higher. Not overly higher, but higher. And this equates to a 2.8 headline up from a 2.7 and a 3 year-over-year core, highest since February. All right, so it's going higher. The way to look at this is they're expecting tomorrow an 87 basis point move based upon where the option market is. But if we take a look here, anything above 0.4, and I think that this is where it gets super interesting because they're saying there's a 5% that you're going to get above that 0.4, but they're saying you're at a 3.4, so they're 6 basis points away. They're saying that you're going to come in around, you have a 25% coming in here and that you're going to lose 75 basis points to up. And if you come in line, you're going to be flat to up. So if we skew it this way to where they're really leaning on their number, they're basically saying you're going to be up a little bit to down. And I think the important part of this is if you see a 0.4 print, we're probably going to get hit pretty hard tomorrow. At the same time, if you come in really, really weak and you came in at like a 2.5, they're saying you're going to go up 1.5%, 2%. So they're the numbers they're the skews that I would look at. Everything else in between. But they're saying that they're skewing it to the upside, that they're leaning it that risk is to the upside. When I look at these numbers, I don't see it that way. And I also don't think the market viewed it that way at all either. But the two things that I would take away from, if you see core over that 0.4, there's a problem. Below 2.5, we're probably going to melt up. Now, I'd like to get to some individual names, but I do think we should talk about some things that happened today. So here's the stocks. And if we just zoom in right here, we can see that we opened highs, pinned, closed low of the day, shooting star back under the 22. If we drop this down to a 358, we're sitting right here if we use pre and post. If we're not using pre and post, we haven't broken yet, and you still have a 5 and an 8 cross. So that means that 240 area really needs to hold. The other one that I'm really concerned about here is IGV, and we are losing IGV. And in front of you is the 3, the 5, and the 8. And you have a turn here. Now, people will say, well, you've had this turn before in here. It's not the same. And I'll show you why in a second. But if we just go back to this, I'm going to clean all this off and then we'll start. The last time that you had anything like this was back here. And the difference is the trajectory of the 8-day moving average. So what this is telling me is that we're pointing down. It's sloping down, and every time that we try to rally over it, they're smoking it. So up, over, everything's fine. Come on in. The water's warm. Wham, Matumbo. Oh, everything's good. Come on in. Everything's fine. Wham, whack-a-mole. Like over and over again. So 8, 5, 3, and they're all pointing down, and they're all saying red. So then that puts you in the position of going, well, when was the last time that happened? Well, the 8 is actually up there. So I have a declining 8, a declining 5, and a declining 3. When was the last time that we really had that? We had that for a little bit in May, and then it turned around. Was that an area of interest where you should have bought? Not particularly, no. Now, if we look at this and go, all right, here's the 4-hour, and then we're going to look at the 4-hour and go, all right, well, where are we on IGV in regards to where we are here versus where we were back in these areas where that was happening? And we could see that we're way more oversold here. It's definitely weaker, which is not a good thing. So this is setting up to break. Now, whether it does break or it doesn't break, I'm going to say it again because some people want a guru. Find another channel. What you have here is the probability that you're going to break. And if I had to give you a scenario to look at, it would be to clean all this off. I would come here and say that I have a head and shoulders. That's how I would view this on IGV. And IGV is just as important, if not more important than the socks. And then what I would say is I have a left shoulder, I have this wonky little head, and I have a right shoulder, and here's my neckline. I would argue that the right shoulder is not as developed as the left shoulder, so the break should not be as great, right? The higher the right shoulder is versus the left, the better you are. But you go from the peak down to the neckline, and it gets you about a 4% drop. So is it the end of the world? No, it's not the end of the world, but it's going to hurt. It's going to hurt. And a 4% correction in IGV can lead to a 10% correction in the names. So those names that you could see are names like Oracle, which are holding. And the question is, are they going to start buying top tech? Meaning, are they going to go buy the Microsofts and the Oracles of the world and let the others fall by the wayside? That's not how this works. It's not usually how any of this works. But weirder things have happened, so it can. I don't think so. I think they're just going to puke it all out. And I think that's where it's going. So if you look at something like a CRM, that was at 240 the other day, and that was major support, and it's gone. You've lost major support there. So if you start looking at these names like Crowd, this finally stopped going down. So you might actually be getting something here to hold, but you have to go through them all one by one. Like, that looks disgusting. Snow. That really looks gross. There's really not another technical term for that. Like, the idea that this isn't going to fill the gap, I would almost take the odds that it would fill the gap. And that's where you're going with these names. So I think if you lose the IGV, then the SOX is going to follow. And to me, if we start looking at some of these names like NVIDIA, did you really do anything today? Not really. You kind of went sideways, took out the high, made a doji, but you're not following through. Now, tomorrow, we're going to get some data. And from that data, we're going to have to make some decisions upon how things are going to go. But when you start looking at how they're treating some of these names, such as Monday and how they're falling apart, or FTNT, and they can't rally. And TTD, look at these names. Like, they're just absolute dumpster fires. There's no better way to describe them. Where does this put us? Well, you go after hours and say, well, who missed earnings? BBAI guided really low, like way off of where they're supposed to be. And that's why it's down. By the way, if this little guy breaks $5, it's no longer marginable, and people are going to have to sell it, which will exacerbate it tomorrow. ASTS actually, they missed, but wait, there's more. They actually outlined their future. The conference call is going on right now. I don't know how this acts. I'm actually long it. So I'll tell you, I think it's going higher. I think that from where we were to where we are now, you're buying a company that you're buying the future expectations of what they're going to do. And we've come really far off, and you have a huge short position here, and I think it's too crowded. OKLO came out with earnings. The beautiful thing about not having revenue is, how do you disappoint? I mean, as long as somebody doesn't go out and buy a burrito on the company card, you're okay, right? So I guess they're going to talk about guidance, and then we'll go from there. Another thing that I noticed is the way that they're bidding us into the market. This kind of stuff always raises my antenna, and I'll show you what I mean by this. Oh, you got to get in because we're breaking out, and there's your 5-minute bar. Now, if you look at that 5-minute bar, you're marking it from here down. If I'm to mark that on a fib, so I'll take the high of that to the low of that, right? And in 5 minutes, if you look at our level, you're 61.8% of the entire move of Tesla today. Everyone's going to tell you they were in it and they all bought options and they all made millions. But let's get back to reality and get out of Candyland. If you take a look at this, in 5 minutes, you were 61% of the entire move was the first 5 minutes. So everybody got in there. And so what you're seeing here with these names is they're rushing you in. I got to get in right away. As a matter of fact, in the first 15 minutes, 78% of the move is already gone on the day. That's a red flag. Not just for Tesla, but for the market. See, these things tend to build, or they want to shake you out and then build as the day goes on. And they don't look like this at the end of the day. As a matter of fact, what they did was they really seemed to rally us into these names and then sell them at the end of the day. And not even the big dogs were safe. Not even the PLTRs were safe. Nothing like that. Even these spec names like the BMNRs, and all they did was roll right back over. SBET as well. So again, these are not the things that I would be chasing in this market. I did do a long on this today and actually made $1 on it, surprisingly, because there was a key level up here. But from a longer term perspective, I mean, these things just rolled. Like, if you want to see what ugly looks like, that's what ugly looks like. When you have a shooting star after hitting that and you're close to the low, because you're going to have the hopers and the dreamers in there tomorrow. And then go from there. But a lot of that's going to depend on Ethereum, whether Ethereum can keep this up. I just don't understand why people just wouldn't trade the ETHU if they want to trade Ethereum. It just seems to make so much sense. Or buy Ethereum. That's what those guys are doing. You might as well do the same thing. That's it.